declined. Ed Morse is Citi's head of global commodity research, and he's looking to China for answers, much like Kathy was. Ed, explain why the Chinese situation is wreaking such havoc.
Well, it's kind of easy, Kelly, when you think about China being the largest commodity importing country in the world. They have, 50% of the global copper that's traded. Whatever happens in that economy is bound to have an impact across all of the commodity sectors, more on the industrial metal side than the oil side. But they also look at the price of things and they take actions to deal with them. They like to buy low and to not buy when prices are high. And they started getting oil out of their strategic stockpile in the month of June. And now they've ordered the independent refiners to not import oil to the degree they had in the past, and they haven't given them the license to do so. So some of it's government policy, and some of it, in terms of the reaction of the market, is fear that the COVID spread in China is really going to derail the recovery.
Yeah, and Kathy Wood even sort of pointed to the crackdown on after-school education, the sort of heavy-handedness regulators are using in China, the flight of capital maybe out of Chinese risk assets or China in general and into things like the dollar, into things like Bitcoin, and obviously higher dollar means lower commodity prices as well. So how far are we through this move, do you think?
Well, I think there's going to be a reversal of this move. I think what we've had triggering the move is really macro sentiment and financial flows. And you can see that particularly on the oil side, but also in copper, if you really look deep into it. On the oil side, which is more transparent, the ratio of longs to short of managed money was about 20-1 at the beginning of June. And now it fell through the average of the last 5 years, which was about a little under 7-1. And now it's obviously very, very short compared to where it's been. So money is very fickle, and there could be significant changes afoot where I think this really was overdone a bit. So when you look at lumber, of course, there were supply chain issues at stake. And of course, we've had supply chain issues in the auto industry. You've talked about that. We've had them even on steel manufacturing, impacting the price of iron ore. But some of it is just pure supply-demand fundamentals. Oil inventories are still going down.
Right.
We have no idea what OPEC Plus are going to do when they meet on September 1 about not only October exports but September ones. They can cut back if they really want to. So, and they don't like the way financial flows work against them in the marketplace. So we'll see what happens.
But bottom line, you think people should be buying these dips?
Oh, absolutely. We are absolutely in favor of buying the dips on both oil and on the industrial metals. And I'd say copper, aluminum in particular. Iron ore, we have a little more doubt about because there were more obvious inventory issues at stake there.
Wow. Ed, thank you very much for joining us today. Ed Morse with a look at the whole commodity complex after the sell-off that we've seen.
Shepard Smith here. Thanks for watching CNBC on YouTube.